Ladies and gentlemen, this is a very intense event. We have 3 DAX CEOs. We have a little less than an hour. And of course, we're going to talk about these different personalities and companies, but we also want to talk about, set a story about the fate and the status of the German economy and the transformation of it. So let's get right into it, and let me first ask Christian Sewing on stage. And without further ado, get into it. Christian, for a long time, Deutsche Bank has said that it was held back by the absence of interest rates. Now interest rates are back. Are you back in banking heaven?
Well, I would be a bad CEO if I would say we are back in bank heaven, because that gets misunderstood by a lot of people. But I do believe that, first of all, we have a normalized interest rate environment. And sometimes we have to stress this, because people think that what happened between 2014 and 2020 was normal. That was not normal. Usually it costs money if you take money on. So we are back in normalized waters. But the real item for Deutsche Bank, actually, why we turned around is not the net interest income. Obviously, this is a nice tailwind, but we are also prepared for times that it gets less, because I think we will see at some point in time interest coming down. I think the real reason is that we did our homework, and we focus on that where we are strong. We focus on those businesses where clients really want to deal with us. We got costs under control, we have the risk under control in a volatile environment, and that is the reason why Deutsche Bank turned around. And then obviously net interest income is a nice add-on.
Now this is going to be the cheapest question of the evening. Why is it not reflected or not yet reflected in your stock price?
Because too few people are buying the stock, right? That's the cheapest answer of the evening.
Very good. There is your deep market understanding, which you're famous for.
You see?
Studies have said time and again, 2022, 2023, that the German banking industry at large is behind in terms of digitization, of working with AI, of working with modern digital systems. Does that also go for Deutsche Bank, or have you solved all these problems?
No, I would say we are on a journey. And you know, when I took over the job in 2018, we were not, and I can kind of be honest about that, we were not in best shape, let me put it this way. And I always knew that turning sustainably this company around, and also meaning that we are there from a digitalization, from a technology, from an automation, from a client-centering processes, this cannot be done within 3 or 4 years. This is actually a task which goes 5+ years. If you look at the large US banks, you can see that a lot of successful banks who have turned around for good, their transformation also took 5+ years, if you look at Morgan Stanley, for instance. So I think it's a constant exercise. And I would say investments into technology, in particular in the world where we are right now, never stops. So I would not even say that you come to an end point. You need to constantly invest. In particular, in these times, we now need to invest in order to secure our place going forward. The most important, though, and this is typical for a study, is that in 2023, the German banks are criticized that we are not yet there from a digitalization point of view or a technology point of view. That not only counts for German banks. Most important is actually that the German and European banks have proven their resiliency and their robustness in a very difficult environment in 2023. Look what happened to regional banks in the US. And there was a big fear, actually, that this comes over to Europe. I saw Joachim Nagel from the Bundesbank. I think the regulators have done the right job in order to give us a framework where we can operate in a more robust way. But also we as banks did our homework. I think that is key now. You have robust, sustainably profitable banks in Europe and in Germany. And now we need to have the long-term view to invest constantly in technology. And I do believe then we have a chance also to be peer-to-peer with the leading US banks.
In being on the journey to being a digital bank, are you also a green bank?
Yes, we are. It was actually when in 2019 when we announced our transformation, which was quite a radical transformation at that point in time for Deutsche Bank. There were, next to all the financial goals which you have to give to the markets, we had three kind of qualitative goals. One of that was to be one of the European leading banks in ESG. And we gave ourselves at that point in time a target that we wanted to have 250 billion of sustainable financings and investments by the year 2025. We doubled our goal because we could saw that there is a huge opportunity for European banks, also for Deutsche Bank. And by the year end, or by the end of the third quarter 2023, we are around 265 billion of financing and investments into green financing. It is actually one of the very few asset classes where European banks have a leading edge, where the European industry has a leading edge. It is the growth potential for Europe, and therefore it should not be only a growth potential for the industry, it is a growth potential for the bank, and therefore we are jumping on it.
For a long time when I said that Deutsche Bank is kind of a mirror of the state of the German economy, right now it doesn't seem to be the case, because you're telling us that Deutsche Bank is on the rise, whereas many people here in Davos tell us that Germany is not, to put it mildly.
Well, the facts are right, what you are saying, but you would never see that I'm proud of that. I'm looking at Germany, at the country which is our home country, and as an international bank, you can never be successful globally if you don't have a good home market. And therefore, it is in our interest that Germany comes back to a sustainable growth, which is around 2 to 2.5%. And I get to this point back later. And therefore, yes, we are growing. We heard the nice introduction on the profitability of Deutsche Bank. That was the best year in 15 years in 2022. We had good first 9 months. I can't talk about the fourth quarter, obviously. So therefore, I think we are on the right way. But we need a stronger home market. And in this regard, I don't think that for Germany, and we shouldn't, and please don't get me wrong, we shouldn't overrate that you have 1 or 2 years with zero growth in Germany. But what is missing in this country is the way to coming back to long-term growth. By the way, not only in Germany, but also in Europe. And if you just take one number, if we want to afford our pensions under the German system going forward, Germany needs to grow by 2.5% per annum over the next years. We have achieved that exactly 2 times or 2 years in the last 10 years. And that tells me that we need to do something structurally in Germany, not only with regard to political decisions. I think Belen was on a really good panel today with Robert Habeck. But I also do think it's our responsibility as a private sector to step up and to do more. And therefore, I think single market in Europe, structural reforms, but also looking at all the opportunities, challenges, but also opportunities in the market right now, is something where German corporates are looked at for their excellence, for their engineering capacity. And we have a chance to really succeed. And I think it's due on the private sector to be a little bit more optimistic and to take these chances.
Belen was on a panel that was talking about the European problem, as it was put there. Let me ask you, what in terms of the digital and green transformation is the German problem?
Well, first of all, it's a problem of attitude. And I do believe that we still haven't really analyzed what kind of golden decade we enjoyed between 2010 and 2020. We had preconditions in our country which we will never have again. And we need to be again transparent about that. Zero interest rates will not happen usually. We had cheap energy, we had no defense costs, and we had a global world where Germany was kind of most benefiting from China, but also from this kind of globalized trading. I'm not saying that this is over, but it's different. It is really different. And in this regard, I think Europe and Germany, also with regard to technology and green, need to adjust in this regard. We need to find our pockets of growth, for instance, in sustainable finance. Now, if you look at great German companies like Siemens, if you think about their industrial AI, what they are doing there, how leading they are in that business, we are clearly seen as one of the leading industries in this regard. I could talk about the auto industry, about others. So I think we need to really focus on our areas of strengths. What we have to stop is to kind of be there for everyone, be there for each and every subsector. We need to focus on the strengths which Germany has. If we do this and pull the investments into that, I think we have a great chance of growth.
So you wouldn't mind getting rid of some heavy industries that may not be made for Germany anymore?
Well, I simply believe in the market forces, and I do believe that at the end of the day, we also need to take a choice. And the choice is to go for those industries where our knowledge, our expertise is actually seen as one which is successful and predominant. And to be honest, that also sometimes actually forces you to restructure. Look at Deutsche Bank. We were for sure not in the shape we had to be. And we restructured because we focused on those areas and businesses where we think we can compete, even with some of the successful US banks. And I think that went quite successful, and I do believe that can also be the case for other industries. So it's also forcing more on us and not always ask for government help.
The miracle decade you mentioned was not only a reflection of market forces, but also of what had been done the decade before. After being the sick man of Europe, then there was an Agenda 2010, which helped turning the country around. And that was political. Do we need that again? And what would it look like?
Well, I'm not a politician, and I'm very glad with the job I have. You know, others need to decide. But a little bit of that we need. And again, I would say, Uwe, it starts, first of all, with the attitude of the people. And I mean all people, not only in the political sphere, I really mean also all people in Germany and Europe. That's what I mean with complacency. I have no understanding that we seriously are talking about a 4-day week with the same salary. It doesn't work. Talk to the investors outside Europe. They are laughing at us. It can't work.
And you mean
so I'm not saying that people could work 4 days, but then obviously you also need to adjust your kind of salary you get. It doesn't work. I mean, you know, I'm smart enough to do the plus and minuses, and it simply doesn't work. What I mean is we need to have a different attitude again to work, and that work is the basis and foundation, by the way, also for all our rightly placed social welfare. But the foundation is work, and that also means that performance needs to be incentivized and performance needs to be also seen. That's number one. Number two, I do believe that from a policy framework, we really need to think about bureaucracy and regulation. You know, there is a famous wording that Europe also has its Silicon Valley, but unfortunately the Silicon Valley of regulation. We need to reduce it. And to be honest, you know, there's always the discussion about the IRA in the US and how what Europe needs to do in order to compete. It's not the amount. But if you ask the German DAX companies why they invest, and even now more and more family-owned companies, why they invest internationally, it's not the subsidies they get. It's the speed of approval you need in Germany or in Europe or in other countries. And this is easy to solve. And that means that we also need to have the accountability and also the courage to take decisions. And if we then finally work on that what is at our doorsteps, which we prepared 30 years ago, again, something which came up today in this really good panel, which is the single European market. We have a home market of 450 million people. And I'm not even talking now about banking regulation because, again, Joachim Nagel is here, so I want to get good friends with him. No, seriously, think about the telecom industry. How can it be that we have a European single market and we have more than 100 telecom providers, and in the US with 350 million people, we have 4 or 5 providers? We need to finally get into the area that we have one market from a regulation point of view, from a framework point of view, from a policy point of view. If we do this, Europe has a chance. Investors actually want to invest here.
The German government now has to cut back on its expenditures, as we all have seen. Unlike the US, where state debt is rising and rising, which may be an advantage at the moment. But can your bank, can the banking sector make up for this? Is there enough capital that you can provide for this transformation?
No. Simply no, and this is why for years I'm calling and asking and demanding and pushing for the European Capital Markets Union. If you know your topic from before, the sustainability topic, a topic of growth in Europe. If Europe wants to come to net zero in 2050, we need to invest 600 billion euros each year. 600 billion euros. Think about the defense budget which Germany rightly approved 18 months ago. It was 100 billion, a one-time investment. Potentially we need to do more, but nevertheless 100 billion versus 600 billion. The balance sheets of the banks, though we really gained robustness, we are profitable and will remain profitable. That is not good enough. The public budget is not good enough, and therefore we need the Capital Markets Union, that outside private capital is coming in order to invest that. If we don't get this done, the Green Deal will not happen in Europe.
And do you think that we're going to be in enough of a crisis to get all this?
Look, it's a very difficult question, and the honest answer is, if you look, so to say, not into the room here, but if you look overall, you may come to the conclusion, no, we even need to go deeper. Of course, you have these discussions whether it would have been the right way to go into a deeper recession a year, 2 or 3 years ago during COVID in order to kind of wake him up. But again, I think you can do both, i.e. you can avoid a crisis, because a crisis costs heavy money. A crisis takes credibility away. A crisis takes trust away. And I do think that overall, during COVID, during the Ukraine war, the initial answer, also by the German government, was the right one. But now we need to also have the courage to take further decisions and structural reforms. If we would do this, I think that we don't need a deeper crisis in order to be successful.
You talk to a lot of your clients, of course, corporate clients all the time, also in the Mittelstand. We do the same, and from what we hear, it's not so much that companies threaten to leave Germany altogether, although here and there you hear that, but rather that they innovate elsewhere, that the new stuff is being done elsewhere. Is this also a reflection of what you hear at Deutsche Bank?
Well, whether it's only innovation, I wouldn't say that. I mean, again, there is also a lot of innovation investment still in Germany. But overall, your question goes into, in my view, a really concerning aspect. Because if you ask a lot of globally active companies based in Germany, the answer is very often that the overall profitability of that group is coming from locations outside Germany. And if you do that for too long, it will be harder and harder for you to actually invest into your home country. Now, for innovation, I can see a lot of companies really still investing in Germany because of the education of the people, the university degrees, the talent we still have in Europe and in Germany. But overall, again, it is so important that we make this home country more attractive for investments, because if this goes on for too long, and to be honest, if I only look at the investment loans for long-term investments, which the German banking industry gave out in 23 versus 22, we were down year on year. And that shows that domestically there were less investments than internationally.
Christian, you have to help me out here, because Rainer kind of promised that I extract secrets, and I haven't done so yet. So you have to give us one secret, and then we can finish.
Well, now again, you surprised me, because I thought I come off the panel here without any delicate question. You know what? There is no secret. There is really no secret. The secret is that I tremendously enjoy interviews with you. It's the fourth one. The fourth one. And the real secret is that I feel better and better being interviewed by you, because you don't get any secret or name.
Thank you so much.
Thank you.